Run it. I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah, hit the ground, then it go off. Yeah.
Hi, and welcome back to The Conscious Day Trader. I am Yanis, and there's been a few days since I've posted, and there's for a few reasons. One, I have been managing a trade, and if you've realized from the, if you've seen the last post where we made $800, which was incredible, through a Copier, which we're going to talk about that today. I did get something wrong on the Copier, and I had to deal with a first loss of the year. However, it wasn't on my Fivers. So my Fivers is still on green. What we're going to discuss is Copiers today. I'm going to talk about, I had a few questions on that, on what they are, how they work. Also, we're going to look at my ICT 2022 mentorship trade on the pound dollar. How I basically wasn't able to do my trading on the smaller account, on the Blackpool account, which I copied from my funded account on the Fivers. So there's going to be a lot of information today. Make sure you like and subscribe to the channel. We're also going to be discussing a little bit about how I was reflecting upon this channel. I was reflecting upon, what is this channel for? Is it in like me sharing the profits and saying, "Way, look at me, how good I am," or whatever? Is it because I want to motivate people that this is actually possible, that I left the 9 to 5 and I'm trading, literally that is my sole income? Is it to share the life in Bali? That's another interest of people. Most of all, I do like doing videos, and I used to have another channel where it was about traveling and the life in moving to Bali, pretty much. So all this is going to be discussed, but and of course I'm going to show you my entries and how I manage the trade and exits, and yeah, we're going to go from there. If you're interested in this, you can also follow me on Instagram on theconscious.daytrader. And we're going to jump straight into our results. So let's go on to, for now, because we're using the Copier, we're going to have two accounts. So we're going to see how that is very easy to manage on Tradesync, which is my journal where I upload all the trades, but also how I can very easily filter out to see how I'm doing on one account and how I'm doing on the other account. If you want to use something like that, I've left a discount in the description. You can go and check it out. I think you get a trial and then a 40% if you actually like it. But let's go on our MT5. So here we are on MT5, and on the left side here, I'm trying to hide it so you don't see all my accounts, but we've got a new account, the Blackpool account, which is a personal account, and it's got higher leverage. It's got leverage of 1 to 500, whereas this account has got 1 to 10. Obviously this account is a lot bigger. It is, we're currently in a trade, so it is 187,000, which is a lot bigger than the other account, which I've just added 2,800 at the time. So what I did, I copied the trades from this account onto the other. So as you can see, we had a 638. It wasn't the best trade. It was quite bad in terms of my analysis. I went long on the pound dollar when we had the gap below. So normally I trade into the gap, but we did have a long time of consolidation, and we had some news which I normally don't look at, but I'm aware of when they come in and I stay out. And unfortunately, I wasn't, instead of like killing the trade, I really liked the idea, so I waited. Yes, I make mistakes, I'm human. However, because my account, like I trade, like you know, I risk about $2,500 per any idea that I have in terms of trading, and this was nothing out of the ordinary for this account. However, because I was copying the trades onto my smaller account with the leverage, it quickly racked up and it closed my positions with loss. It got a margin call, and because I was on the Copier, I didn't see that. So things to learn. I do really like the Copier that I'm using. Maybe I should have done a demo account before I put in money. And also maybe I needed to have a bigger account so that this doesn't happen to me. But what we're going to see now is we have recovered, if we go on to this account, we're currently, we recovered a lot of that loss. So we're down 856 on the 15th and trade. But we did make 800 the day before. So we're back. The account is back to, I think, 2,000. So roughly close to 2,000. I added 2,800 into this account. So technically I got margin called and we're going to have to deal with this loss. But it's okay. When you're doing new things, it's probably a better idea to go slowly. I just jumped into it and I did it. But, you know, it wasn't too bad. We have recovered the account. I'm going to see in detail in Tradesync how that looks. We're also going to break down the trade in TradingView. And we're going to do that all right now. But as you can see now, we've got 2 accounts and I am planning to still use the Copier. What I'm going to do is wait for the first extraction, my next extraction for my main account. And I'm going to wait until the Black Ball account is bigger. So that way we don't get margin calls. Obviously, having this huge account on the other side, even though the drawdown is small, the account can take the heat. So I don't get margin called when I'm dealing with repositioning and so on one lot size. So a lot of learning. So now we've seen that, we're going to go on to other account, and we're currently running on 4,000, I think 775 for the month. Considering everything that we just talked and a bad trade yesterday, we're still good. So let's jump onto the Tradesync and we can see it all a little bit cleaner. So what I like about Tradesync is you can upload on different portfolios, and then you can filter out these portfolios so you can see how your performance is doing. But you can also add all the income together. As you remember, we made $800 on Tuesday. This time I've taken out, I'm only filtering onto my Fiverr account, but I can also now add all the accounts on and now we can see that we had a hefty trade that we had to do. Obviously that's that's the trade that closed and the recovery, but also we recovered 1,100 the following day. So this was the 600 in profit minus the 800. So with the 2 accounts, we're currently up on $661. I'm going to have to get used to this color. I'm not used to that red, but whatever, it happened. And it wasn't planned, okay? Maybe through stupidity. I should have done my due diligence to see how much money I need to be able to manage the trade on my personal account compared to the bigger account that I've got funded. So if we take away the personal account, we'll go back to this. And we can see we're running on 4,775. Still green days for the funded account, and super happy about that. And we're going to break down this trade here. 16 brought the trades up to 23. 15 hasn't got a trade because this was from the 15th, so I had to deal with that trade after carried some trades overnight. So let's jump onto our pound dollar and see what happened. So here we are. Something that I'm trialing now, something new that I've seen. I think someone mentioned it. I can't remember if it's Michael or someone else from the community, the conscious day trader community that's building, and I'm super happy about that. This midnight New York and GMT, which is the UK time. So what you can do is go on indicators, put midnight. If you type in midnight, then you'll see this one here, leak Q, and you click on that and that will bring up these 2 lines. One is the New York midnight and the other one is the UK midnight, and you can go on edit and you can change the color and so on, what style you want. So that gives you a day. So from midnight to midnight, you can see what the price did. It's really nice to see the power of 3 when you have sort of Judas moves coming down, then pushing back up, and so on. So people, when you're doing the 2022, there is a mention about midnight time, what the midnight time has done and where the price is trading. We also got our previous daily highs and daily lows that we're going to look at. So let's go back to this area here. So this is what I had to deal with. Look at that move. That looks horrendous, absolutely horrendous. So we had from this position here, worst entry, all the way down here. So we had to deal with a move of 140 pips going long. Why was that stupid of me to do? We hadn't traded into this gap here since the Monday 13th of March. Let me move my camera so you can see that. We hadn't traded into this. We touched it, but it didn't come back down. And I normally trade this. You know me, you have seen me so many times. I don't trade against the gap because I know that it's going to come and fill. So when you know that eventually it's going to come and fill a gap, why have that bias? Anyway, I did have that bias. I thought that this is going to be coming back to break the previous daily highs and then trade down, which would have been my normal trade up to sort of 30 pips, 30 to 50 pips with 2 to 3 positions. And I did get into this trade if we go back on the 2 minutes, and it's easy when you've seen what's happened, but you have to remember this is information that we had. Let's also add the FX markets. So we were going into the London session. It was quite early in the morning, and what we saw is this break here. We saw the break above. If you want a change of character, we have been selling in the Tokyo session. And what we also knew, if we go on sort of the bigger time frames, let's switch this off for now. On the bigger time frames, we knew that we were sort of consolidating. We had that push up there, came back down, pushed back up into sell side liquidity, filled up fair value gap, pushed back up, and we were consolidating around this area in the previous high. So my analysis was that even though we think that we're going to be coming down to fill the actual gap in price, that pound is going to be going up. We also had information from the dollar index. If we go back into the dollar index was showing weakness. Okay, we were pushing down. I know we had this gap, and that would have been an indication for me to stop, which I normally do, and this would have been a very easy trade for me. I don't know. I was out of my game. It happens. Bad decision. So instead of trading from here into here, I thought that this is going to be continuing to the downside, okay, to break the previous daily highs. And we were trading this on the 15th. So this where the price was. We saw push down below, broke the lows of this, came back up, filled the fair value gaps on these. So I thought that this is going to be coming down, which it did for a few moments. So I was $100 up, but then it just continues going down. So what I was doing, I entered there, and I can only manage this trade until the 16th morning. And that's why I held the position. Now, I did a good job. I only had 10 repositions, which sounds like a lot, but it's a lot better than my 36 previously. So the price came down, broke down, and it came. And when this was happening, I pulled this line up, black line, on exactly 1210.100. I knew that the next target would be this. Why? Because we had the fulfillment of the fair value gap, of the actual gap, and we had a fair value gap on here, which was potential draw into that. Potentially, I thought it might break the 120.100. It didn't. It literally tapped it on the spot and then change of character all the way up. Now, let's see. Well, I had to deal with this one here. 140 pips. Okay, so that was like about $1,000 of my worst position. And I had a few more positions in, so I was very close to killing the trade, but my idea that this is going to fail and potentially do a fake Judas move after the gap. Because think of like, if I had my right direction, I would want to be trading into that gap and then potentially maybe putting my you would think that the sell side, let's draw it in, the sell side would be here. Okay, look at what the market does. Because why would sell side be there? We have the people that are interested in trading back into the gap, but we also have people who are getting profits from this move here. You're not going to put your stop down here. It's too far away. Why lose all this profit? Your stop is going to be around this area here. So it made sense that the market came down, touched that level soon as it hit, and that's why algorithmically it looks so clean that this happened. And soon as that happened, I know I was going to be okay. However, 3 positions and 4 positions on my other account, it couldn't take it. It was too big. It was too big. I had 2,800 account, even with the 1 to 500, I got margin called. Soon as it hit that, 1,800, I got clipped, closed the account, couldn't do anything about it. Was it gutting? Yes. Is it good that it happened now and not when I have a bigger account? Yes. Because now I'm going to make sure that that account can take that heat, and I need it a lot bigger if I want to trade it like this. However, what I can do, I can decrease the size on the copier. So I might be trading half a position. So £5 a pip, which is still good. I will still be making half of what I'm making on this account. So it will still add up and build that account. As you can tell, I am a bit annoyed about that happening, but it's okay. This is things that I need to be on top of, and you know me, I do a lot of work on my mental my mental side of the trading. I know I'm good, I know I'm capable, I know I want to achieve, and I'm gonna be honest with you, I really want to achieve a lot of progress and a lot of building into trading bigger and bigger accounts. I am manifesting those bigger accounts. I am working towards I want to have a multiple 6-figure account in my personal account. So this is something that's going to happen, and I'm working towards it. And even though this happened, all it does for me, it's okay, that's going to push us back a few weeks. But I know it has given me something extremely crucial. It's given me information that I know that I need to be having a bigger account to be able to do this. I know it sounds obvious to some, like, why would you trade this with 2,800 the same as you're trading 187,000 account? Yes, right, it's a mistake. Let's move on. So now we've seen that. I managed to trade. My best positions were here, so around this area here in your fair value gap. And my tape reading after that was really, really good. And I think, like I've said before, when things happen and they affect you, they make you a better trader. They also make you a sharper trader. I think this was one of I know I've put a video up with my best tape trading. This was even better. I was seeing this and I was analyzing it as it was happening to the pip. I was touching sell sides. I was also on the downside here. I knew that this is going to literally come back up into, I had it on the 5 minutes, came back and got rejected on, it came down and stopped directly on that block there, and then came down and found support around that block, continued down. This was opportunities for me. I made profit on this move here to recover my top position. So that's 100 pips. I made a lot of money on that. That came down. I repositioned in this fair value gap here. Look how lovely that came up. Push down, repositions, taps the fair value. That was one position, another position, and then pushed higher and higher and higher and higher. You know that I normally go in detail on how I trade the pound dollar. Today, I think is more crucial to discuss a little bit about this community is building. And I do want to have a bit of clarity around why am I doing this? You know, I was at the beach drinking coconut water and watching the sunset. And I was also listening to ICT, ICT Live. And he did question and said, you know, a lot of people are successful in this and they're making videos about it. And the big question is, why are you actually doing this? Why am I actually sharing my journey around trading? Is it to show off that I can make $800 or I can make $24,000 in sort of like a couple of months? What is the reason for me to do that every single day? Why put the effort when I'm making this amount of money? There's a couple of things that it took me a while. I had to really reflect on that, and I really appreciate Michael bringing this up in his live 2023 mentorship, because it's a good question. What's the point of doing this? Is it like, am I selling anything? No, I'm doing this purely as a journal for my trading and to share to people how I'm reading tape and what I've learned from ICT 2022 mentorship. It's a good practice for everyone. You know, going back, having a pause and looking into why you're doing something. What is the core root of why I am turning on this camera, switching it on and sharing my thoughts with you, sharing my trades and so on in my journal. So that's something that I am going to be continuous to do. Maybe you've seen that I haven't posted so much this week. And one of the reasons is because I wanted to get clarity on what this is. What am I sharing? Sorry about the monologue, but it really made me reflect that live call with ICT. I know a lot of people are getting value from this. So that's something that I really enjoy. Just getting messages from people saying, Yanis, I passed the phase 1 of the bootcamp, and it's you know, all your videos are really helping me understand, and that's incredible. I'm really happy for these guys. I also know that people find this entertaining, so they watch this and they really relate to the Bali life and, you know, the trades that I'm taking and managing. Others are seeing this and saying, it's possible, I can do this, I can quit the 9 to 5 and do it. So there's multiple things that really drive me to do these, but there's you know, sometimes someone asks the question and you're like, oh, why am I putting all this effort in? What is it for me? Am I doing it just to feel good? So I'm going to continue to think about this. Obviously, it's not for money. YouTube pays nearly nothing for all this content that I've provided. It's like $70 in like 3 months. So that's absolutely nothing. So yeah, a bit different video today. A bit of a thoughtful Yanis day, if you want. And I showed you this was I'm in a trade now. I am going to break down the trades in the following videos. So sorry if this is your first time watching this. We do a thorough job about looking at daily, previous daily highs, previous daily lows, looking where the liquidity is, why I break down, how I break down my trades, execution and all that. And just have a quick read of the comments and you'll see that that's what we do and people find value in that. But the videos might slow down a little bit, the posting, until I find clarity on why I'm doing this, who am I doing it for, and most of all, what am I doing, why am I doing it for me? What am I getting out of this? And is it satisfaction or whatever it is? I need to have a few moments, maybe a few hours of thoughtful brainstorming on what is the purpose of this channel and where can it go. I am really enjoying this, so don't take this the wrong way. I am really enjoying it, and it's something that I love. I'm a very sociable social person, and with some of you I have really made some good connections around we have we're on the same route, the same goal. We want to be financial free, and we can do that with ICT. So sorry about that monologue. As you can see, this is today's information. Let's do something different. If you've stayed so long and you've heard me bubbling around some thoughts in my head, it will be interesting to do a bit of a forecast. What are we seeing? So this is something new. Well, we've never done this before. Going with the flow. What do we see here? Let's go on the daily. Let's go on the 4 hour actually. What we've seen is this big move here. From that bottom there to the top there. Price came down pretty much to the 50% of that move. And now it looks like it's pushing higher. Now the question is, how higher can that go? That order block is not an order block, that's just a line that I need to change. But it's black, so I've just left it. Ignore the order block. That is an area where it was basically buy-side liquidity, buy-side liquidity above that swing high. As we can see, we've got buy-side liquidity above here and buy-side liquidity above these swings here. Next swing high is here. So very quickly, we can create, if you want, the roadmap of where price, if it's going higher, where it can go. And this can be into your risk management. So like I did, where I was aiming for that price to come down to exactly 120.100. So that was the area. Now let's see what's happened. So the price has retraced to 50% and now pushed up. But let's take that out for a second. What is in the way? Let's have a quick look. This fair value gap here, this is on a 4 hour, so it's a big fair value gap and it's around a previous daily high. So the question that I'll be asking is this filling this fair value gap, failing to break this line here and going above for a continuation lower? That's one option. The other option is this is a real break and breaks all the way and continues to this buy side liquidity here. So if I want to short this back into equilibrium from the previous daily high, what I need to do is identify how can I manage this. Okay, don't manage on a coder when you've got a copier, when you've got a small account. But let's talk about our normal account that we trade. We need to see how far this is. All right, so we're now here, 50 pips. So that can very easily come to this set buy side liquidity, and it can very easily come into this buy side liquidity. So these are two areas that potentially the algorithm might want to come and take liquidity before it continues lower. Now let's see if have we got anything else on the left side. We have a small fair value gap there, not much. This fair value gap that got filled. Let's just put it in because I think this might come to play either this week or the next week. So we've got the 4 hour fair value gap there. And now we have a little bit of a map if the price is going to continue higher. Now what you can do is trade into those buy side liquidity if your bias is long. You might say this retraced, came back to 50% and pushed higher. However, you might, as you know on your daily bias, we have been talking about this double top situation, came back to liquidity below this here, took out this liquidity and now it's pushing higher. However, do we think that the price is going to go high for your bias, or do we think the price will be coming to this? Both valid options. They're probably both going to be triggered. The question is when. And that's what you're going to be thinking about. Is this going to be a green day or a red day? Who knows? We're going to see. But that's how I think about the trade. Also, let's have a quick look on the weekly on the pound. Now, on the weekly, we can see a huge move down here. And if we take that Fibonacci level from that high there, which is an equal high on that one, and we place it on the lowest, that has retraced to 50%, pushed back up to the 50%, came down, found support, look at that, right on the 38.2, and now pushing up, potentially up to above this buy side liquidity here to the 61.8. But this is weekly. This takes weeks and weeks and weeks to for it to play out. So maybe if you look at this, you might be saying, okay, I think the pound is going to be stronger. It's going to go up to the 61.8, and it potentially might go to. If you're on the other side, you might say, okay, it's trading below the 50%, and it's going to go back into the 23.6. Why? Because in the middle of 38.2 and 23.6, we have a fair value gap. That fair value gap might come and fill on the daily and potentially go back up to the 61.8. And this is information, we don't know what the price is going to do. But either way, we need to have a roadmap in every single occasion. If I start seeing, let's take my bad trade from the 15th. The price, even though I should be trading down into the gap, I was going long. My immediate question is, how am I managing this? Where is the price going to stop? How can I manage my trades if the price stops there? And that's something that you have to have into account. So when it happens, you have a plan to get out of your trades with profit. But however, you have to be realistic with your account size. The other one got margin called. My big account was fine. And that's something that we have to do. Now, that's sort of the ongoing analysis with the current price on the pound dollar. And as you can see now, the price is coming up. This is 2 o'clock in Singapore time plus 8 on the GMT Bali time. So potentially this buy side liquidity is going to be taken out. Potentially this into what we said, the buy side liquidity on the 4-hour and daily. If this fails to break this fair value gap here, and we can see a nicer fair value gap on the 1 hour. So I'm going to adjust that one to that one and that one. That's closer to the price. We're trading above it. We're trading at a premium price because it's above the previous daily high. These are all information if you're going short. If you're going long, you can see this break here, come back down, retraced into fair value gaps, pushing up and pushing up to take the higher ground. That's how you read the price action. And if you go on to sort of the lower time frames, everything becomes a lot cleaner, especially on the 5 minute, which I really like. You can see here, look at this retracement here. Let's take that out. So fair value gap from that position to that position. Now let's zoom out and we're going to bring that across. Boom. Look at that. So if you're trading higher, price came down, touched into the fair value gap, gave an opportunity for long positions, came up, consolidated, pushed higher, broke the previous daily highs, and now pushing higher with an expansive candle. Now the expansive candles can tell you two things. It can be an exhaustive candle where it's telling you, remember this on the 5 minutes, so it's a lower time frame. It can tell you that the move is coming to an end, or it can be a directional candle where it's saying we're going to break through things and push even higher. So that's the two things that you have to be aware on expansive candles. And that means that the candle has a lot of volume into the body. So that's for today's trade. The Copier, I am using Social Trading Tools, it's called. This is Social Trader Tools. So you can, I think I'm paying for $20 a month. I'm not an affiliate, so I don't think they do affiliate links. So these are the two accounts, and you can do two things. This shows me what's happened, and I can go on to configuration. I can go to Trade Copier, and this is where I will do all my analyzing. That is going to be going from the fivers into my Copier on the Black Bull. And then you go here, press click on, and that starts the Copier. I've got it on a fixed lot of 1, which I'm going to be changing as I want it to do, probably going to be doing half of a lot. And yeah, I am 100% sure that I will get my head around this and not do the same mistake that I did. But I'm happy it happened because I want it to happen now with a 2,000 account instead of a 20,000 account in a few months. Okay, so let's go back into a beautiful view in Bali. And as you can tell, a bit of a different episode today. I think we've discussed a lot about the mentality, a lot of preparation, a lot of what this YouTube channel I want it to be and how it's helping people, or what it is not, or maybe what it becomes, who knows. I'm appreciative of every single comment and like and everyone who's watching this video, because you are making this channel work, and I do want to provide as much quality information as I can. There you go. That's a video of this week. And what we're going to do is I'm going to trade today, and I'm probably going to post the video tomorrow. I hope you enjoyed this, and I'll catch you soon.
I can't take no loss. I don't even know what it costs. I hit the ground, then it go off. Yeah, hit the ground, then it go off.